Today is FOMC Day. Kevin Warsh, the new Federal Reserve Chair, is about to deliver his first interest rate decision. The CME FedWatch tool is showing approximately 99% probability of a pause. No rate change, no hike, no cut, just a pause. But here is the thing. In markets, it is almost never the decision itself that moves prices. It is the tone of the statement that follows. It is what Warsh signals about where rates are heading next. And today, for the first time in years, we have a Fed chair who has been publicly described as pro-Bitcoin, operating in an environment where oil just dropped below $80, inflation may be cooling, and the crypto market is sitting at maximum fear levels. At the same time, while retail traders have spent the last several months panic selling XRP down to $1.08 and watching the price chop sideways, JP Morgan, Mastercard, the DTCC, and Ripple Prime were quietly moving into the exact infrastructure those sellers were abandoning. Today, I want to give you the full picture, the FOMC setup, and what to watch for. The mispricing thesis that one analyst laid out this week. Why XRP at current levels represents one of the most obvious gaps between fundamental reality and market price in this entire cycle. And the honest big picture on the Clarity Act timeline, including the uncomfortable update that passage by July 4th is now looking unlikely, and what that means for your positioning. Welcome to XRP Verified. Subscribe and turn on the bell for your daily update. Let's get into it. Let me start with today's FOMC, because this is the specific event that is directly affecting crypto market sentiment right now. Kevin Warsh is delivering his first interest rate decision as Federal Reserve Chair. Markets are pricing in a 99% probability of a pause, meaning rates hold steady where they are. The CME FedWatch tool has a very strong track record on predicting these outcomes, and a pause is essentially the consensus expectation. But here is what actually matters today, not the decision, the signal. Warsh's statement after the decision will tell markets how he is thinking about the rest of 2026. 3 possible scenarios. Scenario 1. Warsh signals openness to rate cuts later in the year if inflation continues cooling. Oil below $80 following the US-Iran ceasefire deal reduces energy-driven inflation pressure. If Warsh acknowledges this and hints toward flexibility, that is a genuine tailwind for risk assets, including crypto. XRP could see a meaningful bounce on this signal. Scenario 2. Warsh holds a neutral tone. Acknowledges improving conditions, but commits to nothing on timing for cuts. Markets digest this as broadly expected. Crypto stays in its current range, with no major directional move from the Fed decision itself. Scenario 3. Warsh turns unexpectedly hawkish. Signals rates may need to stay higher for longer than markets expect. This would be a headwind for risk assets. Crypto and XRP would likely see selling pressure. The base case, Scenario 2, is the most likely given the 99% pause expectation already priced in. But watch the language closely. Any meaningful deviation from neutral tone in either direction will move markets fast. There is also the Iran situation worth noting. Trump confirmed this week while at the G7 in France that the deal is currently a memorandum of understanding, not a final signed agreement. He said explicitly that if Iran does not comply, he will go back to military action. That uncertainty is part of why XRP only moved approximately 5% on the ceasefire news instead of the larger move many expected. The market is treating this as fragile, not resolved. Final signing is expected this week, and if it happens cleanly, it removes a significant geopolitical overhang from crypto markets. Now, let me talk about the thesis that I think every XRP holder needs to understand clearly right now, because the gap between what is being built around XRP and what the price reflects is genuinely one of the most striking mismatches in this entire market cycle. While XRP was trading between $1.08 and $1.30 over the past several months, while retail traders were panic selling, while crypto Twitter was calling for 80-cent XRP, while sentiment hit its lowest level of 2026, this is what was actually happening on the institutional side. March 2026, the SEC and CFTC officially classified XRP as a digital commodity, not a security, a commodity, the same legal category as Bitcoin and Ethereum. 4 years of legal uncertainty resolved. 9 spot XRP ETFs went live, recording approximately $120 million in weekly inflows at their peak. RLUSD reached $1.72 billion in market cap in under 1 year, with more than $18 billion in transfer volume in Q1 2026 alone. Daily transactions on the XRP ledger hit 3 million on March 15th, a significant increase from mid-2025 averages. Tokenized real-world assets on the XRP ledger crossed $3.5 billion, up from $991 million at the start of the year, a 3.5 times increase in 1 year. Ripple Prime joined the DTCC NSCC participation directory, putting XRP-linked infrastructure inside the same clearing rails as Goldman Sachs and JP Morgan. The DTCC processes approximately $4.7 quadrillion in securities annually. And in May, JP Morgan, Ripple, Mastercard, and Ondo completed the first ever live cross-border treasury bond transfer directly on the XRP ledger. Not a demo, not a pilot, a live transaction, settled in under 5 seconds. All of that happened while XRP was ranging between $1.10 and $1.30. Now ask yourself honestly, does a $1.10 to $1.13 price reflect an asset with commodity classification, $1.72 billion in stablecoin market cap, $3.5 billion in tokenized RWAs, DTCC clearing directory membership, and a live JP Morgan settlement on its ledger? The answer, clearly, is no. The price reflects the fear, the frustration, and the impatience of retail investors who have been waiting longer than they expected. The fundamentals reflect something completely different. Now let me add something to this picture that most people are not connecting: the relationship between XRP and Solana in the current institutional adoption story. While most retail investors treat XRP and Solana as competitors or as separate conversations, institutional adoption is treating them as complementary. And understanding this changes how you see both assets. Mastercard signed up for stablecoin settlement on Solana. Western Union chose Solana for cross-border payments. WorldPay chose Solana for merchant settlements. Real-world assets on Solana have grown over 1,000% since early last year, reaching $2.5 billion. Solana ETFs have accumulated $1.45 billion in inflows through the bear market. And XRP is available on Solana right now. When Mastercard's stablecoin rails go live on Solana, XRP is one swap away from every institutional flow moving through that network. When Solana's major consensus upgrade, which cuts transaction finality from 12.8 seconds to 150 milliseconds, a 100 times improvement, goes live on mainnet in Q3 2026, XRP on Solana becomes faster, more liquid, and more embedded in institutional settlement infrastructure simultaneously. The point is not that Solana is better than XRP or XRP is better than Solana. The point is that both assets have real institutions building on them right now. Both have regulatory clarity. Both have ETF products with institutional inflows. And the period where both were trading at their deepest discounts from all-time highs, XRP down 64%, Solana down 70%, was the period when Mastercard, Western Union, JP Morgan, and the DTCC were all quietly moving in. Standard Chartered has publicly predicted XRP reaching approximately $30 by 2030. From current levels, that represents approximately a 25 to 27 times move in under 4 years. That is not a moonshot number from an anonymous Twitter account. That is a published price target from one of the world's largest banks. Now let me give you the honest update on the Clarity Act, because there is an uncomfortable development this week that you need to know. Passage by July 4th is now widely considered unlikely. Today is June 17th. That is less than 3 weeks away. Congress is dealing with the Save America Act first, which needs to pass before the Clarity Act moves to a Senate floor vote. The legislative calendar is compressed. Summer recess approaches. Senators and representatives are distracted by the World Cup, baseball season, and their constituents back home. The more realistic timeline is mid-July, after lawmakers return from recess on July 13th. And even that requires the remaining sticking points to be resolved. Those include reconciling the Banking and Agricultural Committee texts, finalizing ethics provisions, and addressing law enforcement concerns about certain DeFi language. Galaxy Research still puts the probability of passage before the August recess at approximately 60%. But July 4th as a specific target is now largely off the table. Here is the honest assessment of what this means for XRP holders. A delay from July 4th to mid-July is not a fundamental change to the thesis. The Clarity Act is still coming. The institutional infrastructure is still being built. The fundamental case for XRP has not changed because a specific date slipped by 2 to 3 weeks. But it does mean the short-term catalyst the market was pricing in, the July 4th signing ceremony, is off the table as an imminent price trigger. This extends the period of uncertainty and the period of sideways price action. The right response to this is not panic. It is patience with clear eyes about the timeline. Now the technical picture for XRP today specifically. XRP is currently trading around $1.20, bouncing from recent lows around $1.08 to $1.10 on the back of the Iran ceasefire news and general crypto market relief rally. The critical level to watch today, specifically around the FOMC statement, is whether XRP can hold above $1.19 and push toward $1.27 with meaningful volume. $1.27 remains the key resistance and breakout trigger. A clean daily close above $1.27 on strong volume would signal a genuine short-term structural shift. If Warsh's statement is interpreted as hawkish, or if any negative surprise emerges from the Iran situation, 1.10 to 1.13 comes back into play as immediate support. $1.05 to $1.08 is the critical floor that must hold to maintain the constructive technical structure. The short squeeze setup remains live. Significantly more short positions than long positions are still open in XRP derivatives. If today's FOMC statement is even slightly positive for risk assets, the combination of a relief rally catalyst and extreme short positioning could create a sharper move upward than the fundamental news alone would justify. XRP community sentiment is at its lowest level of 2026, according to sentiment data. Every previous time sentiment hit these levels, a relief rally followed. Not a guaranteed prediction, but a historically consistent signal. Your full summary for today. FOMC Day. Kevin Warsh delivers his first decision as Fed chair with 99% probability of a pause. The tone of his statement, not the decision itself, is what moves markets. Watch for any signal toward future rate flexibility as the bullish scenario. The Iran deal remains a memorandum of understanding, not a final signed agreement. Trump confirmed he will return to military action if Iran does not comply. Final signing expected this week. The fundamental mispricing thesis is clear and documented. JP Morgan live settlement on XRP ledger. DTCC clearing directory membership. RLUSD at $1.72 billion. $3.5 billion in tokenized RWAs. 9 spot ETFs. All while price traded between $1.08 and $1.30. Clarity Act. July 4th passage now unlikely. Mid-July post-recess is the realistic target. 60% probability before August recess, according to Galaxy Research. Delay does not change the fundamental thesis. Technical picture. 1.19 immediate support. 1.27 breakout trigger. 1.05 to 1.08 critical floor. Short squeeze conditions remain live. Sentiment at 2026 lows historically precedes relief rallies. Stay informed, stay patient, and as always, stay verified.